Hello and welcome back to the Property Pilot Podcast. I am Brian Graham. We are talking today about how to build wealth through real estate investing. This is episode 23. I'm really going to be talking about my own plan and how I did that, how I continue to do it. I wouldn't really classify myself as having already built wealth. I classify myself as building wealth. Let's talk about first the definition of wealth. You're going to see, obviously, Google's answer. You're going to see different gurus out there. But my definition of building long-term wealth is, one, having an income that supersedes or far exceeds my expenses, having assets that produce cash flow rather than needing a job. 3, my net worth being, I don't really know a number, but let's say long-term goal, 5 million plus net worth. And then let's say number 4, having money left for my family and generations to come in order for them to not have to work, but rather use the wealth that I have built in order to, start their own careers and jobs and give them the opportunities so that they can continue to build on that wealth. Similar to how I think it's the Rockefellers that have done it in such a way where their overall family trust is essentially their family bank to help them buy real estate, to help them start businesses, to help them with education. And I think I love that method. And that's what I classify as long-term wealth. So how do we get there? Well, in my opinion, I'm going to follow Robert Kiyosaki and his recommendations on 2 ways: investing and owning businesses. You're never going to get rich working for somebody else because you're making them rich. So you need to be figuring out how to build your own long-term investment strategy, whether that's starting a business, investing in other businesses, or buying real estate. So today we're talking about how to do that through real estate. So let me talk about, from the beginning, my plan. So I started out with a very simple plan. My first box I needed to check, or rather my milestone, was to buy my first property. I said this in previous podcast episodes, but it was my ultimate goal to buy my property as quick as possible after I read that first book, How to Increase Your Financial IQ by Robert Kiyosaki. Well, that book came and went. And then when I figured out I couldn't buy a property because my income was so low on my tax return, because I was a business owner, I was a strength conditioning coach, I needed to wait 2 years in order to increase my income. So then I could go to the bank and get a mortgage. So my first objective was to buy my first property. So I had to wait 2 years. In that meantime, I was reading as many books as possible. I would consider myself as knowledgeable as you could be without actually having done real estate investing. So I bought my first property for $92,900. And my overall expenses at the time, my wife and I, our overall expenses with car payments, insurance, taxes, grocery bills, rent, our total expenses was probably $3,500 a month. That's not a lot of money, but I wanted to make sure that eventually my real estate would pay for that. My passive positive cash flow would pay for $3,500 a month. Well, here we are, fast forward 5 years, our expenses have increased to about $5,500, maybe $6,000 a month with car payments and a mortgage. And now we're about to actually change homes. We're about to move in another 2 weeks, and our expenses are probably going to be at about $8,500. That's, cars, that's mortgage, groceries, cleaning lady, That's pretty much everything. I'm rounding up a bit. It could be closer to 8,000, but let's say 8,000, 8,500. I want my real estate income to pay for that. That is my goal. And this is going to be a home because my wife's also pregnant. We're about to have a daughter. And obviously expenses will increase there as well. But um, I want our income to pay for those expenses, our real estate income to pay for those expenses. It is going to be that is the box number one to check in terms of my wealth goal, because the income that I produce from my day-to-day job, which is my strength conditioning business, and the income she produces as her interior design business, there's only one of us. Unless we scale that business to have employees, she actually has an assistant, but to scale that business for multiple employees, that requires, do I own a gym? If I own a gym that costs rent, then I have to build out that facility. It could cost $50,000 to $100,000 in equipment. So that is an extremely, I'm not going to say risky, because I feel like the risk is pretty low. My clientele base is already there. I have the demand. But to get a facility, I'm increasing expenses and I don't really need to. It may increase my income by another $50,000, give or take, when all I need to do is buy, 5, 6 more properties to increase my income another $50,000. So which one do you think is easier? I could buy 5 or 6 more properties this year. It doesn't really make sense for me to scale a business that will take another, 8 to 10 hours out of my week, when I could buy 5 or 6 more properties that may take only another hour out of my week. The difference is tremendous. And then once I scale that to a certain point, I could hire somebody full time to manage those for me. Rather than hiring a property manager, I can hire my company manager to manage my business, my real estate business for me. And then I'm only answering, issues when I need to. So um, that is the first box on our wealth building, goals to check, is to make sure that our real estate income covers our expenses, and then we start to use our earned income. I mean, not only to continue to buy real estate, but to really start to exceed that expense category. So now we're like pocketing / investing every single dollar that we are earning actively on a day-to-day basis, and we can start to accumulate, one property every 6 months, one property every 5 months. Now it's one property every 4 months, and so on, until it's one property a month, and it is just, on autopilot, to where we end up getting to, instead of checking that box at 8,000 a month, now we double it. Now we're getting 16,000 a month from real estate, and then we double it again. Eventually, we're going to go to 32,000 a month, and maybe we increase, our buying power to. So now that we have more buying power, we increase, our horizons, and start investing in, bigger multifamily units. Maybe we start to syndicate deals, and this will help us, push that snowball faster. But right now we're having great success in the single family home and the multifamily home market, especially these high interest rates. Unless you're buying a 5+ unit, unless you're buying that cash, where, you get a 6 to 10% cap rate, using debt at 8+%, 7.5+% doesn't make sense. You lose money if you have debt at maximum loan to value. It just doesn't make sense. And if you don't lose money, you're hardly making any money. You're really only buying that for tax deductions and tax benefits. um, so again, we go to the wealth building. So through real estate, that provides a significant amount of cash flow now that we can start to scale. And then my next objective of that would be to hire a manager, if not somebody to manage my own business, maybe someone to manage my own properties. And I haven't really thought about this yet, but the times that I have thought about it, I'm thinking first I'm going to hire a full-time maintenance, maybe a full-time contractor, somebody that I can have on my payroll, paying them, $60,000 a year, in order to work on my properties. And if he's good enough, then I can start to, kind of branch out into other categories of investing where I can maybe start like a flipping business, because now I have that contractor in house rather than having to get on someone else's books. I can just say, hey, man, I purchased a property. You're going over there to flip it. You're going to be working on that for the next 30 days. Um, and then check in on that, and he can, go at it. He has his deadline. He knows how much he needs to do. That's a huge benefit. And then, let's say someone calls into the leak, someone calls into this issue, he can head over there whenever he needs to, because 40 hours a week he's on my payroll. And then once that scales to a certain point, maybe we hire an assistant for him, some sort of helper, or we get a manager now where that person is looking for properties for me. He's the one handling maintenance requests. He's the one people are calling when there's an issue, rather than me, which isn't even that big of a deal right now. But as I scale to 20 plus, 30 plus units, obviously things, I probably get one inquiry a week right now with 17 units. I could, with 30 units, as I double it, it goes to 30, it goes to two, probably on average 2.5 per week, about something that's going wrong. But those things that have gone wrong, knock on wood, have not been crazy, because I keep up to date on my maintenance. I try to make sure nothing is going deferred. But anyway, back on topic. Being able to hire these people, the contractor, the manager, allows me to scale that business now, where yes, I'm out maybe $60,000 to $100,000 per person, but once I scale this business to 8,000 a month, 16,000 a month, 32,000 a month, and I have 50, 60, 70 units, I get to the point now where I'm going to need to start estate planning. I'm going to need more time back in my hands, so that way I can continue to grow the portfolio. I can protect it. So with these properties that I accumulate, I'm going to have to put them into LLCs. I'm going to have to create an estate plan. Working with an estate planner, I'm not even going to begin to talk about that, because I only know what I know from watching some YouTube videos, and obviously having trusts, revocable, irrevocable trusts, and who can control those, and blah blah blah, is extremely important. And I don't even want to begin to talk about what I know about them, because I hardly know anything. But obviously what I do know about is protecting your assets in LLCs and such, and so I have done that, and want to make sure that continues to happen through the more properties I accumulate. The higher my cash flow, the less I really want to use debt. Now that I've like start to get to the point of 8 properties, 17 units, cash flow is starting to increase. I get to the point where I've been using debt this whole time, which, because it helps me snowball tremendously quicker. My return on investment is higher, 25, 30%. Right now I've got 4 Fannie Mae, Freddie Mac mortgages. I've got 5 private lender mortgages, or sorry, it's the other way around. 4 private lender mortgages, 5 Fannie Mae, Freddie Mac mortgages. And I think my goal as I accumulate more units is going to be to pay down all of that debt, at least, especially the high interest rate debt, to one, boost my cash flow. Yes, it does decrease my return on investment, but it boosts my cash flow. And it really does allow me to continue to buy more property as the cash flow is higher. And I can do that with or without debt, but especially not having to worry about issues with debt, and all those issues that come along with it. Now, there are benefits, meaning like the bank will pay my property taxes, the bank will pay my insurance through escrow accounts, but having control of these properties, full control, not having the negative of debt, although debt is a very powerful tool, hanging over my shoulders, that'll help me really, really increase, because obviously the more equity I have, the higher my net worth. And I can start to do different deals. Like if I'm trying to get out of a property, It allows me more wiggle room. I can do some creative financing, to which also helps boost my cash flow without the risk. So I can do, I can offer it to someone else for 5, 8, 9, 10%, and they can take ownership of the property, and then they manage it, and they deal with it. I just receive, like the bank, just that check every month from the interest. Um, yeah. So anyway, then once real estate income really has progressed, I think my next plan would be to buy businesses, but but specifically through real estate, which is this podcast. I'm not going to get into other businesses, but specifically this podcast is cast a wider net in order to accumulate more property in a different way. Could be through creative financing, like seller financing. It could be through um, wholesaling. It could be through, maybe hiring, different high school, college kids that are interested in working, getting an internship or whatever, and then they can start wholesaling, just cold calling people and trying to get properties under contract, and then we go find other investors, or maybe we just do that for flipping opportunity. Um, it can be a tremendous tool to help grow, because you can grow your cash pool much quicker through wholesaling or flipping than you can with long-term real estate investing. I could flip a home in 30, 60 days and make 25, 30, 40, 50 grand, depending on how well it goes. But if I'm long-term real estate investing, buying cash flow rental properties, I may not make 10, 20, 30 grand for a year plus, and still a great return. However, I can do that in 30, 60 days through flipping. Obviously that depends on the market and where you're at, but uh, it is a tremendous tool to grow that cash pool. But anyway, my plan, in a nutshell, to recap, is obviously to have my real estate income pay for those life expenses, whatever it is, start to pay down debt over time. That includes my primary residence as well, which I would probably be the first one of all of them, because my primary residence doesn't make me any money. So it's bad debt. It doesn't make me money. Pay off my cars. Everything's cash. No more bad debt. And then all the good debt on my real estate income, then pay that down over time. That way, debt isn't a problem at all, which, knock on wood, it hasn't been a problem, but there's no more bad debt or even good debt. It's just everything is owned free and clear. And I think that truly, on top of financial freedom, is the American dream when it comes to wealth building, is you're in 100% control of every single asset that you own. And then I'm just going to need a portfolio manager really at that point. But again, with the wealth building, having an estate planner, once that time comes, to be able to have your assets in such a way that the next of kin or can use your business as a investment tool for their future business endeavors, their education, and so on. To buy real estate is I think my ultimate goal and what I'm trying to achieve with wealth building. But it should not be just this, oh, I want to make $1 million a year and that's it. I highly recommend you have some sort of goal of what you're trying to achieve. What are your predicted expenses and when? Because if, right now you purchase 5 rental properties and you make $2,000 a month, but your expenses are $10,000 a month 5 years later, well, the rental properties aren't really doing you much right now. So, I mean, they're doing 20%, but of your overall expenses, but it's not a lot. So my recommendation is you got to figure out what is your short-term goal, what is your long-term goal, and you got to start building that snowball now. That way you can continue. Because if you get to that 10,000 expenses too quick, it may hinder your ability from investing because you can't save enough money. So I mentioned I was trying to get 1 property a month, and then eventually maybe 2 properties a month, or maybe, 1 a week, 1 every other week. If you get to that expense number of 10,000 a month too quickly, you may not be able to buy any property, maybe 1 a year, maybe 1 every other year, and that's going to hinder your snowball. And I think we need to, redefine what the American dream is. And I think the American dream is financial freedom and have the ability to, on a random Tuesday, Wednesday, or Thursday, take your kid out to the park and not have to worry about your boss calling you where you're at, where are you? You need to get here, when you can't even take off work and hang out with your child or your husband or your wife. So I strongly consider that in your wealth building, because your goal is going to dictate how you do it. So I hope this podcast was of some help for this episode was some help to you on how you plan for, growing your portfolio, and, if you haven't started, how to get started. And if you have started, maybe pivoting or making some tweaks, and always stay the course and be positive with yourself. So I wish you guys the best of luck, and I will see you in episode 24. Bear with me if I happen to miss a week or two, because my daughter's supposed to be born and I'm moving into a new house. So wish me luck. But I'm going to try my best to be here for episode 24. Always remember, it is never a bad time to buy real estate. The advice and recommendations I offer are intended to be informative and educational, drawing from my own experiences in the real estate market. It is crucial to recognize that every investment decision carries risk and outcomes may vary. I am not a financial advisor, and the information provided during these podcast episodes is not intended as financial, legal, or professional advice. It is your responsibility to conduct thorough due diligence, seek the advice of qualified financial professionals, and make informed decisions based on your individual financial situation and goals.